We've got a distinguished panel ahead of us. I'd like to introduce them if I can find my notes.
Just find somebody who's
So I'd like to start off with Fuller from the Government Employees Pension Fund from South Africa. The next I'd like to introduce is Cleopas from the Public Service Pension Fund from Swaziland. And I believe that we've also got Lesidi, the acting CEO of the Botswana Pension Officers Pension Fund. And then finally, Dev, who is the chairman of the Africa Pension Funds Network, but also runs one of the pension schemes, as he will probably talk to us about in Nigeria. Our duty today is really to talk about, first of all, just a brief background about the pension funds, and then our involvement in the capital markets, and then what the opportunities are from the rest of the continent, and also global institutional investors where they can invest with us. So we've got a very good mix, as you can see from the panelists, a lot from Southern Africa. I'll pitch from the east of Africa, and then finally Dev will talk to us about the west of Africa. But hopefully by the time we've all put in our pitch, you will have a view of what's happening within the continent, certainly within the pension sector, and what the opportunities are, certainly, for you to be able to invest. So I'll start off by talking about the Ugandan scheme, which is the NSSF, largely created in the 80s. Actually started off in the 60s, but reformed in the 80s, and the purpose was to try and provide, obviously, retirement benefits to employees within the private sector. However, it was started by a government instrument, which meant that government owns it. However, it is addressing the workers within the private sector. It is a DC scheme, or a defined contribution scheme, and the benefits are paid out in a lump sum. Population of Uganda is about 40 million people, of which 15 are working, and about 10% of those are covered by this particular scheme. So there is quite a lot of people not covered, and those are mostly in the informal sector. So in terms of the governance of the scheme, it's obviously the trustees are chosen from the government, or as part of the government situation, but also from the employer side. So there is the tripartite arrangement, where you have government on one side, you've got the labor unions on the other side, and then you've got the employers who've got seats on the board. And our population, like most of Africa, is very young. About 70% is less than 30 years. So our investments tend to be for the long term, because obviously the liabilities are again for the long term. So there is opportunity for having a lot of funds available to be able to invest within the country and also within the East African region. The sector is currently undertaking reforms, and we believe that those reforms will allow a lot of the pension schemes from outside of Uganda to actually come in and participate on the collection side, but also on the investment side. And we believe that that should stimulate especially the informal sector, where there's been a logjam with not being there appropriate benefits for members to join from the informal sector. With regard to our investment, as I said, much of the age of 70% of our members being lower than 30 years means that in terms of our investments tend to be long-term horizon. Our sort of asset allocation is between fixed income, equities, and real estate, with a higher percentage allocated to fixed income, about 75%. Our sort of desired is around 70, so we've got a little bit of a spillover there. Equities, our desired is around 21%. We are at about 15%. So we need to do a little bit more on there. And certainly on the real estate side, slightly high on there, but mostly of illiquid real estate, and very little in terms of REITs and all those instruments that give us the liquidity. Equities have done very well. Obviously, we've had the discussion from the panel before last, where they talked about the performance of the stock exchanges. In East Africa, we've seen very good performance of the stock exchange, and therefore that has given us very good returns for our members. Our challenge now really is to try and see if we can put a little bit of exposure into private equity and also venture capital with a view to then exiting some of these investments through the stock exchange, basically stimulating the stock exchange to have more product, because that's been one of the issues. And then certainly within the real estate area to try and bring in, especially on the supply side, but also on the demand side, creating instruments there. So what is in there for the institutional investors? I believe that certainly within the whole of East Africa, I think the message was passed on clearly by the presidents yesterday. There's a couple of bond opportunities, especially government bonds, because there's a lot of fundraising for the power projects, the roads, the rail, and the gas and oil, especially on the refinery side. So lots of opportunities there. Obviously, notwithstanding the fact that there's been instability in the exchange rate, largely driven by external factors. Everybody knows about the problems of China and the strength of the United States dollar. So that has had an impact on the currencies. But certainly, foreign investors have been part of the market. We've seen that drying up slightly. And we believe that once the currency stabilizes, and we think that there's been an overvaluation of the currency, we should see some bit of stability, and therefore, foreign investors would be welcome. So just a little bit of an overview from the East African region, which hopefully we can then see either duplicated within the rest of the regions. Though I think Dave, having covered really what's happening within the network, which covers many of the pensions, I would like now to bring it back to the floor and see if there are any questions, and then we'll sort of summarize after that. So if we could get a couple of questions from the floor. And by the way, lunch is calling. So just an added incentive to keep the questions not complicated.
Mine is not really a question, it's more a clarification. I thanks the panel for the amazing job, and as well for giving me the opportunity to clarify what I said before, as it's mentioned twice. In the number several fund I mentioned, the 4 under consideration consider South African upcoming sovereign wealth fund.
Okay.
I also mentioned that there is a source named ONFIF that consider PAC as a sovereign wealth funds. So during our conversation in the panel, we used the consideration that according to our panel, PAC is not a sovereign wealth funds. But it was for the sake of the reasoning and the objectiveness of the fact that changing definition, unfortunately, changed the overview. Not only in terms of is a sovereign funds or not, but the overall asset under management of sovereign wealth funds, because under $50 billion is more or less what PAC is. Yeah. And I do agree 100% that PAC doesn't have any requirement, but if we change definition, according to HomeFIF, it should be included. So thank you for the clarification.
Not a problem. We'll send you the bill for that. Let's have another question.
Thank you. Rob Colorina with AIC Investment. Maybe this is towards Fulu or whoever wants to comment. The transition from being South Africa only, and we've invested in Africa, including South Africa, towards multiple countries within Africa. Can you speak a little bit about the thinking behind that, change between the operating people and your board, and maybe just some of the surprises that came that could be positive or negative towards the expansion?
I think, Fuller, that's for you.
Okay. Happy to take it. So the change happened, so the liabilities of obviously South African pension funds are based in South Africa. And so, being a government fund as well, you want to create employment and you want to create all the great things in your home country, but you also realize that you need diversification. And so it was an engagement process between the board of trustees at the time with the Minister of Finance to say, well, is it possible that we could at least start with maybe just Africa? And we realize that the opportunities are great and they're there, but given the size of our fund and the size of the market, we're just not going to gain any traction quickly enough. And so if we do want to diversify further, we said we'd go into global markets. So the tenure of trustees is also an issue. So whilst there's the long-term investments, it's a defined benefit fund, it's got long-term liabilities, you've got infrastructure investments which are long-term in nature with a predictable cash flow. You want to be invested in a lot of those. I think the difficulty we have is in the tenure of the trustees, in the sense that they have a 4 to 5 year term, and sometimes decisions made by that board obviously impact the decisions of the next board, and so you do find that it's a difficulty sometimes in having to explain why you went into some investment in some country for whatever the reason was at the time. What we do find in general is that there is some overlap in the board of trustees, and so you may find that a trustee member is elected and stays on for 2 terms. And so that allows for that kind of transition phase and for continuity within the board. And so we've recently, well not recently, about 1.5 years ago, a new board came in and has continued the strategy of the previous board. We're at a point where we're reviewing our asset liability modeling at this point in time. And so it may be that we go through an engagement phase again with the minister to say, could we further diversify? I think what we are seeing in terms of opportunities is that the African continent offers a lot of that diversification for us. Yes, global markets do too, but I think in terms of our role in South Africa and in Africa, we prefer to be going into those markets. We also find that the returns we're expecting, so I've spoke pretty much about everything else except I haven't spoken about returns. So we have had really great returns in South Africa as well as in the African continent. We've also seen that a lot of South African listed companies have expansion programs into the rest of the continent, and so through our holdings in a lot of South African companies, we have exposure to the rest of the continent. And so from a return perspective, I mean, I don't know if you've seen the numbers on the Johannesburg Stock Exchange, but it's been phenomenal. We've seen double-digit returns for over 5 years. We've seen returns over 20% in the last couple of years. We don't think that is sustainable, but we certainly have seen that. And so as a way forward, we need to diversify away from those listed markets into the kind of unlisted markets. We will get that diversification. And we believe that in South Africa, we're still seeing, whilst, for example, infrastructure returns have lowered somewhat, we certainly do think that in the rest of the continent, the return profile is certainly higher. And more diversified for our portfolio.
Yep. Any more questions? I think there's one more there.
Yes, I had a question. I'm Hugh Bobbitt from Georgetown Equity Advisors. I was representing a hedge fund in Switzerland, and we approached your fund because of some of the currency issues and through some contacts that I have in South Africa, former chairman of ESCOM Pension Fund, and it was, we were not able to really get anywhere, and as we can see on the continent, one thing that's needed, I think, is currency management of some of the currencies and some of the funds and some of the pension funds.
Well, would you like to take that? I think it is a general question. I think the rest of my colleagues, I know the currencies have really suffered, but if you want specifically from the South African perspective, perhaps she can answer.
Yeah, sure. I mean, so from a hedge fund perspective, or rather hedge funds you said you represented a hedge fund in, yeah. So when we decided to go on our international allocation, we decided to access the market in the best way possible, the quickest way to gain that exposure. And also given the capacity and the resources within our institutions, between the GPF and the PIC, we kind of started with the fruit, like picking the low-hanging fruit. And so for us, that was investing in passive management and having obviously that diversification in the currencies through investing in those, for example, emerging market currencies, which are or emerging market companies which are listed, let's say, on the MSCI, within the MSCI is 15%. It's all MSCI all country, which is 15% emerging markets, and so we do have that exposure. And the rest of it is obviously local currency African investments, which we do have. And the way that we've done it is that we've invested in the local currency with no with no hedging of those underlying currencies at the time. So we do take the currency exposure.
Currency risk, okay. Great.
Currency risk.
Is it Raj?
Mahesh Kotecha. May I push a little further on this issue, because I think it's quite, as a speaker pointed out, it's quite vital, and I'd like to kind of make this particular point. If you look at let's say 54 countries in Africa, or 36 countries in sub-Saharan Africa or Middle Africa, if you
And
know,
54 currencies, I suppose.
54 currencies, right? Now each one has 80%, 70%, even maybe 60% or 40% in their own countries, right? So you have huge amount of exposure to yourself. But as a whole, you could pool through the network and create a fund which is something everybody can participate in. It seems to me this is your low-hanging fruit that somebody should pluck, because you could create an Africa-wide pension fund in which everyone can participate to a larger or a smaller degree.
Yeah.
Why not do that?
Yeah, I
I
think.
think that's what the network is about.
Yes.
Yeah.
Well, actually, Dev, you can fill that in. You got all the answers.
That's it. Well, I'm not sure about that. That's a very good point. I think that's one of the things that the network is all about. But you realize that you have a mix of government funds, private sector funds, and all of that, and decision-making process vary from fund to fund, from company to company. Some of them need boards and presidential approval to do things. So we're trying to navigate all of that. The thinking and the big theme is really around vehicles that will allow pension funds to access, to access real assets on the continent. So whether it's infrastructure, private equity, and housing, but particularly on infrastructure. I think that's a big theme, and I think that it's. I can't say that it's one year or 2 years away, but I think that is the whole objective of the network, and it's something that African Development Bank is really, really interested in doing. So we can have discussions around that after our panel, if anyone is interested in that.
Yeah.
I think maybe, Mr. Chairman,
sorry,
just maybe to add to this, to the panel, is that I think we also, as Africa, need to look at the issue of institutional memory. My colleague just talked about the issue of board turnover. Yes. It's an issue that is not only prevalent or maybe unique to South Africa. I think in almost all the pension funds, it's an issue that we really, at that forum, we also need to maybe lobby as to having a fixed term for the board of trustees, so that there's one thing that we also have to be mindful of, the fact that as a pension fund, you exist for one reason, and that reason is to have your members having a dignified life after retirement. And now, if the board of trustees maybe come for maybe 6 months, and after 6 months they would have done maybe an introduction of their investment strategy, and then they leave it midway, and then somebody comes, people have got different ways of doing things. And therefore, this issue of the institutional memory is something that your forum should really be looking at, lobbying for the different pension funds through the regulators. Thank you.
Yeah. All right, maybe one more before we come back to the panel. Well, it looks like we won't have one more, so we'll come back to the panel. So just as closing remarks, I'd like each one of you to pick on to what you think will happen over the next 3 to 5 years, certainly with an emphasis on opportunity to especially the investors out here who are not in Africa. So if I would start off this time with Dev and go down the line.
Okay, so I think for me the big theme is really on infrastructure investments in Africa and how to get it right, how pension funds can invest in infrastructure, and we think that like we made the point, most of investment opportunities in Africa infrastructure are greenfield rather than brownfield assets, and you could say not so suitable for pension funds to get in. But how do we overcome these challenges? We also think that the private equity model of 2 and 20 won't work with this greenfield asset, because you start a toll road and it takes 5 years to complete. You are paying 2% to the asset manager. At the end of the day, you're probably losing out. So one of the things we're trying to lobby government to do is to set up a fund with our sovereign wealth fund, and perhaps also open it up to other pension funds that already have the allocation to Africa, like South Africa and Botswana, to buy brownfield assets from governments. So you have airports, you have toll roads, you have power plants that have been built and been de-risked and are operating and commercially viable. We think that the pension funds can buy these assets and release monies to government to go and build the next generation of greenfield assets. So we think that if you use this mechanism, you could create a platform where, so if you buy those assets, maybe $5 billion, you give government, they go and build the next set of assets, and then you turn around and buy them, because ultimately the pension funds are the real, long-term holders of these assets, because our members are young and we can hold them for forever, 30 years, 40 years. So that for me is the big theme, as far as pensions is concerned.
Yep, let's see there.
Yes, thank you. I think for Botswana, like I said before, our going forward as a strategy is on the infrastructure, but the thing that gives us sleepless nights is how do we ensure that the identified projects for the infrastructure gives us back return in the shortest period of time. So in terms of the next 2 to 3 years, is that we need to segment our projects so that we can start with those 1 to maybe 12 months projects, so that, at the end of the day, by the time we declare our interest or our returns to the board or to the members, we ought to have a continuity into the sphere. Thank you.
Thank you. Cleopas?
Thank you. I think the last part, one speaker actually hit the nail on the head. Pension funds, as we know, manage financial assets. They don't manage projects. So we need to form instruments, structure them in such a way that they can be specific to projects, they can be specific to sectors. But given the size of the pension funds that we have in most African countries, it is simply attractive to invest in instruments that are specifically designed rather than to look into projects, especially if the projects are cross-border, because then you don't understand the setup. I don't understand the setup in Mozambique, which is very close to Swaziland. So how much more in Gabon and other countries? So I would really say we form these instruments and then they trade within the regions. Thank you.
And Falu?
Yeah. So, I mean, I've indicated that ours is not a very diversified, well, we're trying to find further diversification. And so what we are doing is obviously moving some of our listed assets into unlisted. I go back to the point that has been made. At the end of the day, the role of our existence is to pay pensions. And so we have to look at the risk that we're taking relative to the return we're expecting for each of these asset classes. And so given where we are, we do have some direct real estate, we do have some listed equities, some listed bonds and so forth. For us, the thing that's going to pay is probably further diversification of our portfolio. So I indicated that we've got 5% targeted for Africa when it's not invested. It's only 1.5% invested. Our fund is also a young fund, it's a growing fund, we're 100% funded, and so this target is always a moving target. And so we're basically looking to find opportunities, and we believe that these will be found in the unlisted sectors. So that's real estate, that is infrastructure, that is private equity, mezzanine funding, and obviously the growing listed markets within the rest of the African continent.
Well, thank you so much. I'd like to end by actually quoting from the newspaper headline that ran in my country today. And it went along, I left my phone there, but it went along the lines, NSSF, which is the pension fund in Uganda, which I manage. NSSF doesn't have, has more money than opportunities. Where can we find the opportunities? I believe that there is a lot of opportunities around the continent. And I believe that many of the pension funds are in this position where they can't manage projects, but they need to manage financial assets that will basically be able then to add value to Africa. And we think that the opportunity exists in the sense that the regulation is changing, that the capital markets are improving, and there is a lot of work to be done. So thank you so much for listening to us.
Doing business in Africa. You can't afford to be without Africa Investor.